Hi, I am Anna. I come from www.ntvforex.com. Dollar selling pressure continues for now, remains a key driver of major markets. Video.http ntvforex.com News ID 455ACD 7/23/2020 11:53:53 AM. Market Overview. There have been key breakouts across major markets in recent days. The one recurring theme linking it all together seems to be one of selling pressure on the dollar. The puzzle pieces appear to have all fallen into place for selling the dollar. There are daily headlines of COVID-19 infection rates, accompanying increasing number of U.S. states reintroducing lockdown procedures. This is coming just as the EU 27 have agreed on a fiscal stimulus package that involved the joint issuance of debt, a move that shapes a far more stable union moving forward, boosting the euro. Furthermore, risk appetite has had a shot in the arm too from a series of positive COVID-19 vaccination treatment tests. In the background too, tit-for-tat moves between the US and China, this time over shutting consulates, continue to play out. Subsequently, we see a rare event where the market is buying US equities on the risk-positive lean and buying US treasuries on fear of the impact on the US economy in the coming months. The dollar is getting hit across major currency pairs, and commodities are pulling sharply higher. The question though becomes whether there begins to be a bout of profit-taking on these moves. Wall Street closed higher once more, with the S&P 500 0.6% at 3,276. US futures are marginally higher once more, with the E-mini S&P 0.3% this morning. Asian markets were mildly lower overnight, with the Shanghai Composite 0.4%, whilst the Nikkei was shut for a Japanese public holiday today. In Europe, a mildly positive early move with FTSE futures 0.4% and DAX futures 0.5%. In Forex, there is an ongoing risk positive, USD negative theme as we see USD underperformance across major pairs, with AUD and NZD performing well. In commodities, perhaps an early sign of stalling or maybe reversal, with silver 0.7% lower, and gold 0.2% higher. The oil breakout is holding, another 0.5% higher today. It is another quiet morning for the economic calendar. Into the US session, the US weekly jobless claims are at 1330 BST, with another 1.300 M claims expected in the past week after 1.300 M previously. Eurozone consumer confidence is at 1500 BST and is expected to show a recovery in July to 12.0 from 14.7 in June. Chart of the day: AUD/USD. As risk appetite has taken off and the dollar has sagged, a raft of major markets broke through key levels earlier this week. One key major which has confirmed its breakout was the Aussie. For the past month, the market has effectively been in a consolidation range between 0.6775–0.7060. A shallow uptrend has been tracking the move higher since May, but Tuesday's decisive move above 0.7060 confirms the market is pushing forward once more. Taken as a rectangle breakout or an ascending triangle, the implied target is similar, a move higher by around 285 pips towards 0.7350 in the coming weeks. Standing in the way is historic overhead resistance around big figure levels, with 0.7205 April 2019 high, 0.7285 January 2019 high and 0.7395 December 2018 high. However, momentum is strong still with the breakout, with RSI above 70, stochastics above 80 and MACD lines rising off a bull cross. There is strong breakout support now between 0.7000–0.7060, which is a good R to look for opportunities on a pullback. Brent crude oil. Although it may not be unrestrained buying pressure, Brent crude is holding on to the break above recovery resistance to now trade at levels not seen since March. The breakout above $43.95, the late June high, has taken a few weeks to be achieved, but the bulls are now slowly and surely getting control back after a period of consolidation. Upside pressure is mounting for a move to finally close the big gap at $45.20. This would be a key moment in the rally and be a move that would open the way for the next stage recovery. With a succession of higher lows, along with improving momentum once more, the bulls are moving into position. Throughout the consolidation, we have seen momentum indicators unwinding to help renew upside potential, especially on MACD, but with RSI moving to multi-week highs into the mid-60s, there seems to have been a shift into a more positive outlook in the past few days. We still look to buy into weakness, but a close above $45.20 would open a move into the $50s. Initial resistance is $48.40, but little really standing in the way until $50.53. Support comes in at $42.35 initially, with $41.30 growing in importance. Dow Jones Industrial Average. After weeks of struggle, is the Dow finally starting to break free? The recovery from the island reversal of June has bumped up against resistance for weeks, but now a positive candlestick to close the big gap at 26,940 has been achieved. The bulls may not be storming forward, but steady progress has been made in the past few sessions and an uptrend of the past 2 weeks has developed. Momentum has been improving as the daily RSI has confirmed the near-term bull move, now into the 60s, whilst stochastics are strong above 80. Initial resistance from last week's 27,070 high stands in the way of a test of the key rebound June high of 27,580. We continue to note the all-time highs on Nasdaq and S&P 500 breaking its equivalent June high already, so the Dow bulls will certainly be hoping to follow suit now. Hourly chart indicators show a market primed to buy intraday weakness and to push on now. The importance of the support band 26,300–26,610 is growing as the market builds well from Monday's low of 26,505. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.